They're coming after everything, I think. People have said, well, what if they come after the gold, confiscate the gold? Yes, people have been worried about that for 10 years or maybe 5 years or so, but in the interim, gold has done really well and it's still protecting you. That's what gold and silver, physical, outside the system provides you, because things are gonna get really turbulent. I can't tell you when it's gonna happen, but once it happens, it's like it's not gradual. It's like I'm not gonna say the word. It hits the fan. That's it. You can't do anything about it. It's better to be 1 month too early than 1 day too late. Once the crisis erupts, there is no time, and I think things are serious.
Global investors are watching gold and silver closely as fresh data shows central banks continuing strong bullion purchases while U.S. Treasury volatility rises again. Recent liquidity strains in money markets and renewed concerns about shadow banking exposure have pushed safe haven demand higher. Gold has held firm despite rate cut uncertainty, and silver is seeing renewed interest as industrial demand forecasts improve. With geopolitical risks and inflation expectations resurfacing, many analysts say the metals are entering a new phase of accumulation. In this explosive new clip, London-based independent analyst Mario Innecco warns that a massive shadow banking and derivatives crisis is brewing beneath the calm surface of stock markets and GDP headlines. Speaking on the Innecco 64 channel, Mario reveals why the Federal Reserve is quietly panicking, how $1 quadrillion in derivatives dwarfs the real economy, and why physical gold and silver held outside the system, plus cash in hand, remain the ultimate insurance policy. It's better to be 1 month early than 1 day late, he stresses, as repo markets flare and confidence between banks collapses once again. Let's watch clips from Mario Innecco's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, the Fed is in a panic, specifically the 12 regional banks. They've kind of lost control of shadow banking, and we're going to look at that. It's a crisis that's brewing underneath the surface. Yes, we've been told that GDP is doing great, that the economy is going to pick up in 2026. But I'm afraid there's a lot more going on that the powers that be are concerned about. Of course, they're not going to tell us, but I have it from good sources. You don't have to believe me, but you might want to listen to it. Before we go further into that, I want to touch upon gold and the fact that the Italian government is looking to raise revenue from people's gold hoards, private gold hoards. And I think governments are going to become more and more desperate. The Western countries, US, UK, Italy, France, not so much Germany, but they're up to here in debt. They're trying to find ways to cover their fiscal holes. Government is not getting smaller. The public sector has a lot of political power. They want the goodies. People don't like taxation, right? And we're seeing the cost of living rise, mainly because, 100% because they've been debasing our currencies for so long, and it's going to continue because that's all they can do. But they're coming after everything, I think, and people have said, well, what if they come after the gold, confiscate the gold? Yes, people have been worried about that for 10 years or maybe 5 years or so, but in the interim, gold has done really well and it's still protecting you. And I'm not saying you need to get rid of your gold because it's the only protection, right? And we're going to quickly look at this story here. It says Meloni's government eyes Italian family gold in hunt for budget funds. Lawmakers propose scheme to encourage citizens to declare undocumented bullion to pay 12.5% tax on its value. Well, I think it's a non-starter. I don't think people who've been holding gold that's been passed down through the generations, be it a small amount, be it a big amount, are going to volunteer to do this. And I was reading in this FT article that a lot of times they sell this gold in like the black market, so to speak, so they don't have to declare it, because there is like a 26% tax on gold if you declare it and you sell it. You wouldn't want to do that, of course. I noticed that the markets are really quiet. There's not much going on. So when you look at that, you think, oh, there's nothing wrong. But, and also the statistics, the jobs number were better than expected. GDP is going gangbusters in the US. The economy is hot, right? Even though they feel that they need to give people a $2,000 check. Why would they need a stimulus check if everything's so great, right? It's not great, right? Recently, we've heard comments from like Jamie Dimon. I think he was talking about First Brands and Tricolor. I think JP Morgan lost a few $100 million in one of those failures. I don't remember exactly which one. And I was talking about Jamie Dimon, about the cockroach. Recently, the bond king, they call him, or huge bond fund, I think it's Jeff Gundlach. He said that a lot of these assets are garbage. That's him, not me. But the concerning thing is the U.S. economy is about 30 trillion via GDP, and private credit and private equity is roughly around 3 trillion. We don't really know exactly, and we don't really know how many times they've leveraged that into over-the-counter derivatives, right? There's always those pesky derivatives that they kind of cleaned up, right? After the great financial crisis, they banned OTC derivatives, they regulated it. Oh no, I'm sorry, I'm joking. Nothing was done. And I spoke with Judy Shelton the other day. She spoke about this. She said it's a mess at the Fed. They're allowing these people to basically speculate with the sustenance of the American nation, the sustenance of the world, because these primary dealers, they're not just American institutions. Have, you know, Google New York Fed primary dealers. They're foreign institutions there, and everyone's paying for this. And yes, she said that there's 600 trillion in derivative notional amounts, and this is what they're betting on. But I think it's more than 600 trillion now, Judy. I think we're talking the 1,000 trillions, which is a quadrillion. So you can see how this could become a problem. And I think the Fed knows that even cutting rates or doing QE might not solve anything. They wouldn't be in such a panic, and things wouldn't be as chaotic if they could just cut rates and start QE again. And I think the whole problem is that we've had this financialization, we've had this Ponzi finance, especially since 2008, zero rates for over 10 years, bailing people out whenever we need to. That the system is just unhinged now, and people are losing confidence in each other. Look at the repo market starting to flare up again. The Fed's having to step in because financial institutions won't deal with each other even overnight. So yes, faith and confidence in the system is collapsing. The other thing that people are doing that you should think about is actually getting physical cash out of the bank and putting it in your dirty man safe, putting it somewhere safe, because things are going to get really turbulent. I can't tell you when it's going to happen, but once it happens, it's like it's not gradual. It's like I'm not going to say the word. It hits the fan. That's it. You can't do anything about it. It's better to be 1 month too early than 1 day too late. Once it comes out, once the crisis erupts, there is no time. And I think things are serious. I'm not saying you should stop doing what you're doing, like in terms of investments, but have some insurance. And that's what gold and silver, physical, outside the system, provides you. Because nothing is certain in life. Not even, maybe the Fed will be able to solve this private credit, private equity, shadow banking problem. But the probability is very low that they will. So in terms of what the Fed's going to be doing soon, I guess they have their FOMC meeting on the 9th and 10th of December. They will decide on the 10th whether they'll cut rates. They will stop quantitative tightening, which is unwinding the balance sheet. It's the reverse of QE at the end of November. So at the end of this week. Next week is already December.
As global financial pressures build, Mario Innecco reminds viewers that once a crisis erupts, there's no time left to prepare. His message is clear. The system is showing real stress, and relying solely on governments or banks is a dangerous gamble. He emphasizes that gold and silver remain essential lifelines, simple, independent assets that protect wealth when confidence collapses. Innecco urges viewers to stay vigilant, stay informed, and secure themselves before the window closes. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.